journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
All right, folks, this is the chart, the long-term weekly chart of silver. I'm going to bring it up to you here and show you going back here. There's where we were in 2011 at $50 an ounce. We came down to $10 an ounce. Now we are at $35 an ounce, and you can see here, already today, just today, bring us up and see it. We've dropped $1 something a barrel. Wait a minute. Wait a minute. Let me see. Silver is not in barrels, it's in ounces. Anyway, that's what's happened so far in the silver. Gold continues to go higher, and I'd like to announce something that I think is very important. In my 62 years of trading, I finally found something that will never, ever go down. So buy gold as much as you like, because it has no chance of going down. It is going straight up. My first price objective is $13,000, and then $26,000 an ounce, and then $100,000 an ounce when it matches Bitcoin. So buy all the gold you can, because it looks like a good deal for me. All right, now let's take a look here at the stock market, because it's in big trouble, folks. You already know that, but now you're really getting the drift of it. Here's the Dow Jones. I want to get this up here, right here. We're down about 700 points and just getting ready to go a lot lower. You can see here, here's the big move, folks. Here's where we're going as a minimum, all right? That's down here at 37,000. That's only about 6,000 points in the Dow, maybe even more. And I don't know if that's the case or not. We're below the 50% level. Look at this big move here today, down 900 points, folks. That's what it says here, from 27 to 29. That's 900 points. That's a big drop. And it's not even finished yet. You got a half a day to go. Keep in mind of that. That's not a good thing. All right, now let's get a couple other things that need to be attended to. Let's go look at, we've looked at gold, but let's look at it again. Here's what I did last night in the gold, folks. I thought you might get a kick out of this. I put this in my video. During the night, I was watching gold move rapidly to the upside. I could see a price objective up here at 331.21, okay? And then I kept looking and looking and looking. I did a couple others here, and I saw another one up here at around 320. Okay, and so that's another one that I looked at. I did about half a dozen of them. And so I said, maybe it's something got going here. And so I said, when we got to this level here, I said, look, this measures up to 321. So I said, that ought to be a place to do it. So I said, well, if I sell it at 321, it's pretty volatile, so I have to risk $10. It only went to 322, 31.22, and then it rolled over and came down quite a bit. But the fact is that it came down below these lows by quite a bit. I mean, just very, very quickly. It's telling you that there's people out there that love gold. Raise your hand, Larry, because I love gold too. All right, let's move over here. I want to talk a few minutes about a couple things that I think are very important. Folks, I put a lot of time in on this thing about the stock market relationship to 1929. Folks, it's happening. This is no longer fantasy. It's happening. I pointed this out to you several different ways, but I don't know how it's going to end, but it's going to end badly. Whether it ends in a 32-type depression or not, don't know, don't really care. I'm just glad to get it out of the hat place, whatever the place is where they save their hats here at the Coliseum. Anyway, that's what we're watching here, folks. So let's keep in mind that that's what we're going to look at. All right, now let's get up here and we're going to talk with Mike Moore. It's going to be, oh my goodness. Mike Moore is going to be our guest at the break here, if we have one. And I know we will, but we'll get up here And first of all, what we're going to do here is pull up Tesla, because everybody wants to know how Tesla is doing. And there's a big red right here. And it's down a little bit, but it's still way above where some of the things used to be, okay? So as you can see here, it's had a big move down. We went from 220 up to almost 300, and now we're backing off a little bit right in here. So they probably won't be invited to the party, folks, because it's just not too, abusive enough to make it to the party. But today's low was exactly 61% retracement in A, B, C, D format, and we'll get you wrapped up in some nice gauze and taken care of, and you'll be able to come back and visit us again, I hope. So remember, every day is an attitude of gratitude, and may God bless. Okay, now let's get up and talk about Mr. Appel, who's down by the well, who's meeting Mr. Rabbit, who's there with the other stuff that he carries. Hold on just a second. Just a minute. Oh, here's the one I want to look at, BITO. This is when I think that this would be a good one to sell short, folks, because it's not acting well at all. And as you can see here, it's got the lower tops in here. This is when we didn't trade during the days. That's not unusual, because they don't do overnight stuff, which I can certainly understand that. But if you go from the low back here to the high up there, and someone's knocking on the door, guess what, folks? That's part of your property. Yeah, that's what it is. It's what it is what it shall be, and what it shall be is what it's going to be, and what it's going to be is what it could be, because that's what it is. Let's take a look here at the Japanese yen, folks, having a hell of a move here. Looked at this morning, and I said, shut the front door and raise the rent. This little puppy is ready to rock and roll. There's the dollar index, and now we're going to draw it in from way back here to see if there's any relatives that she had. Bing, bang, boom. Okay, there's your ABCD right at a 50%. You can't ask for anything better than that. Might not work, but that's what you got to do. Let's take a look at the euro, because the euro's been strong. Fact is, there's the euro. We're going to bring him out on a daily basis. And it's been strong. And here it is today. As you can see here, early this morning, we had a pullback, and the pullback took us exactly. I mean, folks, look at this. You don't believe ABCD, you don't deserve to look at this program. But I know you do, so we're going to continue. There's your ABCD right there. And that means that it's getting ready to most probably be called in by the Federal Reserve. What do they call that place? The Federal Reserve? No. Supreme Court. And of course, he'll be interviewed by Steve Martin, Eddie Murphy, and can't think of another comedian right now. All right, we got that with the Japanese out of the way. Let's take a look at the British pound, because it's always loved by everyone, especially those in Britain. We'll be right back to talk about the BP. Who loves you, baby?
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Hey folks, this is the chart of the British pound. As you can see, this is 60 minutes starting to move lower. It's the a very bullish pattern in my opinion, because what it's doing now, it is forming a Gartley pattern. Let me get this up here so we can all see the thing together. There's your X point right down here. There's your A point. There's your B point, C point, right in here at your 78% level. That would be a good spot to take a look at the long side. You can see the price is 1.900. And that's all I know, and I am sticking to it. Let's take a quick look here at the Bitcoin. It's some type of a micro-strategy that no one bothered to tell me, but it has something to do with that. You'll notice the days up, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 up and 1 not up. And who's the one that's not up? It's already been cleaned, folks, so you don't have to worry about that. So the maid came in to try to clean this, but it's already been cleaned. So let's move on to the next one here. I'm very, very tired, folks. I've been working 18 hours today, so bear with me, please. This is the British pound. I think we're going to come down into here. It looks like it's got a good chance to do it. It's got everything going for it. 61% retracement here, A, B, C, D right there. So that makes it pretty nice, okay? Let's move on here to the next one. We're going to draw this in to let you folks see it first. And there it is right there. So keep a close eye on that one. I think I have not covered Tesla. I think I might have missed that one, but there it is right here. It's acting pretty good. You can see here, this is the last, the hourly chart going over the last 3 days. It's holding up, folks, exactly at the 61%, 382% retracement right there. It's been here for 1, 2, 3, 4 hours, holding up pretty good. That's a very good sign. All right, now let's move on here and take a look at the, the gold is still going up to probably 190 or 4190 or 4290, something like that. I don't know where it's going to go, but it could go up a whole lot higher. All right, now let's move over here to the Treasury bonds, because they went down and made our perfect level down there at 115.08. Draw that in. You'll be able to see it on the daily chart. The 4 hour. And there it is right there. There's your ABCD pattern right there. And you can see it's right on the money. And look at that, perfect ABCD setting right there. And it's had a very nice move of almost 2 handles today, folks. That's a big move in Treasury bonds. In one day, that's equivalent to almost limit up, but there's no limit there anymore. So it's not the same thing. But this is a vertical move, folks. You'll see it's a heck of a move. And it's for real because everybody believes it. And that's what makes it real. Now we'll get the one that is really funny, folks. This is soybean oil. This was our first trade of the day. And the trade of the day was to sell the soybean oil. So it was trading right in this area right here, okay? And I said, sell it here if we get there, and then look to make 100 pips. Well, folks, traffic got a little backed up there in the Pueblo, and this thing backed off just a little bit. And before we could get to the office, it was trading up in here. So we got very, very lucky. No one would have lost any on that, but you still have to count it as a bad criminal thing because you were not doing a good criminal thing. Robbery is not good. Now here is the trick. Try again, Larry. This is the gold medal itself, okay? There's where we came in at. It dropped exactly, if you'll notice that, $20, up $20, and then chopping around, making its final little keeping a promise of his fiance. And there's a little ABCD right here on the 4-minute chart. And so far it's working, but it's still real early in this one. Now, I want to see if I can get the fresh update on this because I know, now that's not it. Hold on a second. Well, that's, sure looks pretty, don't it? But that's nothing more than a moving average, folks, and I don't know where in the heck it came from. That's all I can tell you. And I'm not going to tell you any more than that because there's nothing else to tell. Let's look at a couple of things that were very important to me I'd never heard of before. And one of them is the fact that there's a lady in Wyoming, and she took a picture of the car, and she painted it, and handed it over to us. No questions asked. You can see there's the ABCDs, one at 133, the other at 166. And our trainer and fearless leader, Frank Sinatra, and this is not a joke, folks, decided maybe we had better play something else, a different type of a game. This was actually a true story, folks, but I was not the one involved. It was none other than Kevin Spacey got tied up with that, and it turned out to work okay for him, but that's Hollywood, and you know how that stuff goes. Now, in the middle of the night, I don't know if I told about the middle of the night. Let's move up here. We've got Mike Moore. It's going to be our guest on crude oil. Let's get this crude oil up and take a look at it because it's been acting relatively bullish. It's been up 3 weeks in a row, and we're going to see where it is today. It was up, but it's been a while since I've taken a look at it. Where crude oil starts with a C. Right there it is, right there. And this is April that we're looking at. That's backed off a little bit. Okay. Well, it's backed off how much? $1 a barrel. Now let's just see, folks. We always talk about the 382. This was our last major pullback before the big run-up. Let's see if that was an exact 382 to where we were today. And I do not know this. I'm just guessing, and wow, that would have been a good one. It looks like it guessed pretty much spot on. So that has held up pretty good. These are the same types of things, folks. When you see these sharp pullbacks, make sharp ones. See, this isn't a sharp one. Okay, this is a sharp one. And what does it do? Right to the 382. Really, really good, folks. Really good to see stuff work that harmonically. Now, let's get up here and take a look at Mr. Appel, who's down by the well, who's waiting to see Mr. Rabbit, who's bringing something that he can't remind what it is. Hold on a second. I'm looking for, there it is, Goldman Sachs. Question on Mr. GS. Whoa, no wonder the stock market's down. Goldman Sachs is heading into the sewer. This is a 60-minute, folks. Today it opened at 565. It's dropped 30 points. The most expensive stock in the Dow, maybe not so, but one of the top 3. And look at this, coming down really, really hard. That makes it available to anybody who wants to buy it, because it's on sale. So there it is. Let's see what the 61. Let's see if it's at the 786. And boys and girls, it is, oh, wow, just about a heartbeat away. And I'm not going to give my heart up for that because, by golly, I got some folks there in California, my 2 kids, grandkids, and they think I'm a stand-up guy. They've never been a good judge of character. Look at this, folks. This is a Japanese yen versus a dollar. Perfect. Look at that. On the money, honey. We'll be right back with Mike Moore.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, folks, this is the stock market here in the E-mini S&P, and you can see we're taking out the lows of last month. No, not last month yet, but we're getting close. There's the fail-safe, babes. When we go there, baby, she's gonna be gone. And I mean GONNEE. G-E-E-E gone. I don't know. I did the work on this. Like I mentioned before, wait a minute, maybe Mike Moore was able to make the show today. Hold on one second. We'll check in with him. And Mike Moore is waiting on us. Mike, how you doing, buddy?
Good, how are you? Thanks for having me.
I'm feeling good, but sounding bad. Please continue and tell us about every market that you got, especially the energies.
All right, well, everything's bearish except for natural gas and gold, but we'll jump into it. Okay. Thanks for having me on again. I've been on a little bit of a hiatus as I've been moving houses and then on vacation for a couple of weeks. So let me jump right into the crude oil.
What's a vacation? I've heard that word before. Go ahead, buddy.
Can you see my crude screen?
What?
Can you see my, oh, sorry, hold on. Give me a second here. I'm using a laptop computer while I'm waiting for a new desktop to come in. You see the crude?
Okay. Yeah, it's coming in good, Mike. It's coming in good.
Okay. All right, so crude oil, we've been bullish for the past number of days. That just changed today with the break below 69.75 plus 1.7 per hour. We broke below that right over here, and we've come down to 68.87. If we make a further break below this formation right here, which is going to come in at 69.12 plus 0.4 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time, that'll warrant a decent pressure. Probably at least wash out to 68 even, if not down to 67 even. And then we have a larger bearish formation down here to contend with in the days ahead if that rolls over. If we were to break back above this formation right here, that's going to warrant a renewed strength. That's going to come in at 69.84 plus 1.7 per hour starting at 1 o'clock p.m. Eastern Standard Time. And the RBOB, just stop me if you guys have any questions. The RBOB, or the unleaded gas, also broke below a formation. The RBOB, we had been bullish from the break above 210.97, that was in here, and had a really nice rally for 15.19 cents. But I said the trade below 224.83 plus 7 per hour warrant of pressure, so we've seen that. That's brought in pressure down to 222.76, and then a further break below this formation, which is going to come in at 223.91 plus 5 per hour starting at 1 o'clock p.m. will also warn of decent pressure. I would also note that we held this exhaustion level up here at 226.18. We held it once with a 226.16 high, and then again this morning, basically with a 226.69 high, and rolled over. And in the heating oil, the trade above 215.19, I said projected this upward 4.5 cents minimum. We attained 11.58 cents, and then I said the decent trade below 224.52 will project this downward 2 cents minimum, 4.5 cents plus maximum, and we broke below there, and it is traded down to 222.05, getting the minimum. If we further break below this formation right here, this will also warrant a decent pressure. That's going to come in at 221.19 plus 0.8 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. If we break back above this line decently, which will come in at 224.79 plus 7 per hour starting at 1 o'clock p.m., that'll warrant a decent strength, and that will likely bring in a rally to test this high again. And then the Brent, this also fell below another formation. Here, the trade above 72.09 in the June warrant additional. Actually, let me back up here. We just rolled contracts in here into the June. The trade above 69.94 warrant a decent strength. We'd seen 426. That rolls over into the June. And then in the June contract, the trade above 72.09 had brought in $1.40. However, I said decent trade below 73.04 will warn of decent pressure. And let me expand that a little bit for you so you can see. We broke below that right in here, and we've traded down to 72.35. If we were to further break below this formation right here, which is going to come in at 72.53 plus 0.5 of a tick per hour, starting at 1 o'clock p.m. Eastern Standard Time, that would warn of additional pressure. If we were to trade back above this line right here, which is going to come in at 73.14 plus 2.3 per hour, that would warn of renewed strength.
Wow.
And the gas oil here, it's rolled over, failed below this formation as well. Let's see here. The trade above 652.15, I said projected this upward $8 minimum, $23 plus maximum. We attained $26.35 before rolling over, and then I said the trade below 671.91 will warrant a decent pressure, so we broke below that here, and we've traded down to 664. If we were to trade back above where that line comes in at 672.54 plus 12 per hour starting at 1 o'clock p.m., that would warn of decent strength again and likely take out this high. If we roll over and take out this formation further, that's going to come in at 657.19 plus 7 per hour starting at 1 o'clock p.m. Before I jump from the energies to the crude and products to the natural gas, does anybody have any questions? Or
no, I think we're pretty good, Mike. You're covering it really nicely, so continue, please.
Okay, so jumping into the natural gas, we had been bearish up until yesterday. Get back to the top of this. The failure below 432.50 had brought in 593 ticks of pressure, a couple of the bearish formations in there. Those are on hold. I said we may be in a bearish correction against the move up from 259.50 with areas of possible exhaustion at 375 and lower. We held that 375 with the 373.20 low right here and a rally. Then we further broke above this formation. Right, so the trade above 388.60 projects us upward 130 ticks plus, and we've ended up to 404.80, attaining that.
Stay, folks. We'll be right back with Mike Moore of More Analytics. Stay tuned, Mike.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
More analytics, and please continue, Mike.
Okay, can you still see my screen?
Yes, sir. Coming in great.
Okay. So natural gas, we were just finishing up. The trade above 388.60 projects us upward 130 ticks plus, and we have traded up to 406.80, attaining that and some more. If we were to fall back down through this line decently, that would warrant a renewed pressure. That's going to come in at 383.70. Excuse me. 383.70 minus 2 per hour starting at 1 o'clock p.m. Eastern Standard Time. Give me just 1 second here. Okay.
It's really strong today, isn't it? Wow.
Yeah, really, really coming back pretty good. Just as a quick note, the RBOB is the strongest out of the three, the heating oil the weakest out of the three, and the crude in the middle relative to one another. Okay. The S&P 500. Okay, the S&P, we got bearish a couple days ago. Trying to size this the right way here. Okay, from the recent lows, the trade above 55.8750, put this above a minor formation there, brought in 249.75 strength. That was put on hold. I'm not going to get into all the overall stuff. Actually, no, I will, because I haven't been on here for a while. So one key thing I wrote about up here is I warned of macro exhaustion at 35.31 and a quarter.
Okay.
And we held that with the 35.02 low and rallied 2,676.75 points into the bull trend, and have now rolled over into a bearish correction or trend against it. If a correction, the minimum target of 55.65 has already been taken out, but time-wise, an exhaustion level, the first of which comes in at 51, a higher time frame one, comes in at 51.4875 to 46 even, should not hold more than temporarily until after December 30th of this year. So I just want to show you a different chart than I normally show you. Bear with me a second. No, that's not it. This chart, which is a continuation chart, if I scrunch this up, I think I showed this to you in a number of our last shows. This is the basic trend here from October of 2023 up. We have clearly taken out that trend and come off. So, you know, a lot of people say, kind of more novice investor types that don't know much about the markets. They hear this lingo being put around, oh, buy the dip, buy the dip. This is not a situation where you want to buy the dip. If you're buying the dip in a bull market, that's one thing. But this is no longer in a bull market. This is taking out that trend very clearly. And this is now in a bear market, a medium-term bear market. So you can make an argument on an overall basis that we could still be in a macro bull trend. But this trend here has clearly been taken out right here. And so the main stance would be bearish. And I would be looking to sell rallies rather than buy dips, unless we were to take this line out on the upside. Okay, anyway, that was just the overall case you wanted to know. But the more recent and specific, we got the trade below 58.1075, which was the break below this formation. I said to get short below, and we've traded down to 56.20 right now. Additionally, we also broke back below this formation, which came in at, sorry, my screens are, bear with me, everybody. I don't mean to be.
Mine's been freezing all
coming
day,
across
Mike,
as
so welcome to the club.
What's that? Yeah, I don't mean to be coming across as unprofessional here, but this is my laptop that I just got this, transferred everything over to it, and I'm waiting for my a new desktop. Okay, back here. So the trade below 57.72 also warns of renewed pressure, and that was the break below here. We pulled back to it a couple of times and are continuing to come off.
Okay.
All right, so on to gold. Making new highs today, all-time highs. And guess what? I think we may have just hit our macro.
That the one at 39,000, Mike?
Let me see here. Yeah, well, this is so if you've been watching Larry's show for a while, you know that I've been bullish since August 16, 2018. We'd seen 11,000 or 1,100, excuse me, from the break above 1179, and we've seen 1,911.2 per ounce from there. A lot of other bullish calls in here, but one of the large projections within those calls that I've been updating on this show for a long time is the solid trade above 2148.40. Projects this upward 151 minimum, 954 plus maximum. And I would just note that we'd attained 946.5 of that going into today, but to my own fault, I had forgotten to roll into the June contract, which I should have done this morning. But in the June contract, it is traded up to 312, 31.24.40, which will obviously there's a spread gap there, but that will fulfill attaining the 954 plus, or the 954 plus maximum. Now I have a plus after that because the maximum projection was 954, but there's a plus after it because obviously if we were trending in that direction, we could see far more than the 954. But I would note that we finally just fulfilled this, which was a pretty substantial projection. In any case, if we roll over and fail down through 3065.50 to 3065.20, that should start to bring in some pressure. But really the trend lines that would project us downward are going to be coming in lower down in here. The first one doesn't come till 3031 plus 2 per hour.
Why is
starting
that,
at
Mike?
1:30 p.m. What's that?
Why 3031?
That's this trend line down here.
Okay, all right, great.
So, but anyway, so all-time highs in there. And then the Bitcoin, rolled over and got bearish overnight. I said the break back below 87,235 now warns of renewed pressure.
Stay tuned, folks. We'll be back with Mike Moore in just a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey, we're back, folks, with Mike Moore of Moore Analytics. Mike, tell the folks how they can reach you.
You can reach me at mooreanalysis@gmail, which is spelled M as in Mary, OORANALYSIS at Gmail. Or you can visit my website, which is mooreanalytics.com. Again, spelled MOOR. Be glad to hear from you.
Hey, listen, thanks for joining us, my friend, and we're going to have you back very, very shortly. By the way, did you give the folks what your upside projection was in gold? Do you have anything like that they could be hanging their hat on?
Let me just pull that out. Hang on a second. I'd shut it down. Give me a second here. So I don't have any particular projections outside of this one, which we've basically just achieved. Give me a second and I'll take a look at gold with you on a macro level in a second. How are we doing on time here?
Well, take your time. A person had a question. We'll try to answer it for him if we can. You know, it's a Friday, so.
Next macro exhaustion is up in here at 3307.20.
Okay. Hey, listen, that's great. Listen, I want you to have fun over there, and we'll have you on again soon, okay, my friend?
Thank you, sir. I hope you all have a blessed weekend.
More analytics, Mike Moore. Thanks for joining us, folks. Live every day in an attitude of gratitude, and I'll see you on a higher opening on Monday. So may God bless.